Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
All right, so as it broke again, the 100% level, it stalled there, but only for a day before it broke higher and created this island up here. Coming off of the island that formed at that 138.2 resistance, it then pulled back down, and you can see that it is now coming back into the 61.8% support. So I like to use these levels as just another way of providing confirmation of support and resistance zones. What you can see here in the FXY is that levels that are whole numbers also serve as another form of support and resistance. So the fact that that upper level retracement, where it retraced 138.2% of that previous downside move, actually provides another reason for it to hold there. This is also called an exhaustion gap. I just taught a class this weekend that lasted for about 5.5 hours, where we talked about the different types of gaps and how to trade them. You can find more information on that on my site at tradingfrommainstreet.com. This particular gap up here, though, is called an exhaustion gap. And notice that exhaustion gap opened right into that resistance level. The previous gap down here was a breakaway gap, and then we had a runaway gap in the middle. It was a little bit of a small runaway gap, but it was still there. Okay, Vivian asks, let me clear this here. Vivian asks, how is the 100% retracement calculated? Based on point A or the lowest price at your ideal entry zone? Your 100% retracement is actually a return to that previous high. So you're looking at 100% retracement of this previous downside move. And so that serves as a resistance zone. A lot of times if you're looking at retracement levels based upon the 100% level, if you have targets that are coming into that, for instance, if let's say this was a slower upside move into the previous high where the upside momentum is comparable to the downside momentum, then that means that that previous high is more likely to hold than when the momentum is much stronger, like it was in our Japanese yen US dollar pair. And if it had pulled up at a similar rate, usually it will stall just before that previous actual high hit. So a lot of times there's more congestion than you see here, right before that 100% retracement. And so I'll go ahead and take my gains into that zone instead of looking for the exact 100% retracement. My website, again, is www.tradingfrommainstreet.com, and that's all spelled out. You can also find me at ToniHansen.com if that's easier to remember. I have a number of questions here that are asking about that. Mark asked, what if you thought 92 was the low for that moment? I'm not exactly sure what you mean, if it was coming into 92 or not. That is a good question, though, when you're dealing with the Fibonacci levels. For instance, how do you know when the high or the low of a particular trend move has taken place? Well, I like to look at if the correction periods or correction zones within a trend move. For instance, here you can see this lasted for a relatively short period of time, and when it tried to do that again, well, it moved for a longer move here. So I would have expected that that ends up being a break of that earlier trend, and to start with, I would have drawn Fibonacci from this high here into this low here, and then looked at the smaller Fibonacci retracement levels based upon that. Now, as it progressed, we now have a larger correction that lasted about this long. So, because it's coming into this 92 level, we only have this one larger correction after it's already had this downside move here. And so, in order to really turn around or shift, it's going to need something where it can form longer, even if it goes and forms a more gradual sideways base. It needs some sort of longer correction in order to turn around as easily. So it might have fallen and hit like an equal move here, but in this case it went ahead and did that secondary correction of a comparable amount of time. And that's how you get the correct placement of these Fibonacci levels from this high to this low, instead of, for instance, trying to take it from this high here into this low here, because you would have probably found greater inaccuracy in that placement than you would have using, for instance, this low and this high. Rob asked, there are ETFs for Forex pairs. Yes, that's what we're looking at right here, is the FXY, and this is the currency shares of the Japanese yen, and you're going to see that it trades very comparable to what your U.S. dollar, it trades very comparable to what your U.S. dollar Japanese yen currency pair trades. Fibonacci retracement and extension lines are the same thing. When you're, well, I mean not exactly technically. Your retracement levels are when you're retracing back into a previous trend move. So for instance, you have this high and this low. So now you're retracing that move. When you're extending, oops, sorry, you guys still there?
Yep, still here, Toni.
Okay, good. When you have an extension, well, you're looking at prices that extend past this previous trend. So you can get, for instance, a bounce up and then extends to the negative 38.2 level, or you can have that extension higher of 138.2, or if you add different types of Fibonacci, you can also get different forms of extension as well. There's a couple of other questions, but I'm going to go on and finish up here with my slides, and then I'll go back and take them. I also wanted to just show you that these Fibonacci lines work not just only for those of you that are looking for multi-day or multi-week holds like I do when I'm trading the currencies, but also for those of you that are trading on more of a short-term basis. Those of you that know me well know that after hours when I'm doing quote-unquote day trading, although it might be 3 or 4 in the morning, I'm usually trading the ES, which is the E-mini of the S&P 500 as opposed to the currencies. I like to hold the currencies longer term, so I'm looking for patterns in them on typically at least a daily to a weekly time frame. But the same tools and techniques do apply to intraday. It's just that I have different charting platforms for the different things, and it's so much easier to just have to look at one throughout the day. So you can go ahead and, for instance, in this case, you have an upside move where you can connect this low to this high, and then your retracements are based upon the move back down.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.